What's up, gang? Welcome to The Greatness Machine. I'm your host, Darius and I'm so pumped to have you here with me. Now listen, The Greatness Machine, we're about two things. Number one, people who are living their passions. And number two, those who are creating greatness in the world and doing both of these things despite the odds against them. Each episode, we're going to feature interviews with game changers, business leaders, telling us their origin stories, what made them tick, what got them to where they are now. Why? So it can help you step into your greatness within your life, your business, and your career. Occasionally, you might hear a few solo episodes from myself, moi, as I leverage my 20 years of entrepreneurship as a CEO and founder to help you grow and level up in your journey to scale your life and your business. So come be a fly on the wall, enjoy the conversation, and I'm stoked to have you here with me. Guys, welcome to today's episode of The Greatness Machine. I'm your host, Darius and boy, do we have a special guest. Tamar Hermes is in the house. What's up, Tamar?
Woohoo! I am doing so well today. It's raining in Austin and it's glorious.
Oh my God. It was so last night I was at JCC and I get out, I'm with Mariah, my son Pablo, and it was like a torrential downpour and we parked at the one time I parked at the far parking lot and I literally was like, it was like you poured a bucket of water on top of me. I was drenched. So yeah, I do like when it rains though. I like to sleep in the rain. How do you feel about that?
Oh, I love to sleep in the rain, although my dog shakes like a leaf and it gets a little hectic in the bed because she's shoving herself under the covers.
She's in the bed?
Oh, the dog? Yes. Yep.
Oh, my dog knows he is not allowed near the bed. Oh my gosh.
That's an episode.
So, you guys, I know. Like, does the dog get bed access or not? My dog's like no couch, no bed. He's like, your dog's cute and little. My dog's a little bigger. But you guys, so Tamar is one of my great friends here in Austin. We met, I want to say about 18 months ago, maybe a little bit less than that, 16 months ago. We were at a journey here in Austin. And she was one of the first people we met. Mariah and I were hanging out, and I was like, man, I really love her energy. She's such an amazing person. And it's been really cool. We've gotten to know each other, eat dinner at each other's homes, go to parties, and we're a great friend and an amazing human who's doing amazing things in the world. So pumped to have her on the show today, talk about the stuff that she's doing with wealth and women. Welcome to the show, Tamar.
Thank you. Thank you so much for having me, Darius.
Oh, pleasure is mine. So you guys, Tamar, I'm going to go through the formal bio and then we're going to get rocking here. Tamar has 25 years of investing experience with an 8-figure personal portfolio, founder of Women Growing Wealth, and author of The Millionaire's Mentality. We're going to be talking a lot about like wealth and women and her story and some of the cool projects that she's working on right now that maybe you guys can get involved with. But Tamar, if you wouldn't mind, most people don't end up with their 8-figure portfolio, like helping women in wealth, like out of the gate. They get there probably through a lot of learnings. Would love to hear some of your origin story. How did you get to where you got to?
So like a lot of people that have success, I grew up without a lot of means. So I had to work a lot harder. And I started out my career not knowing what I wanted to do, ended up in entertainment, and I really liked it, but I realized that I was exchanging time for money. So the only way that I'd get paid is if I did the work and had to report in. And I wanted what a lot of us want, which is freedom. And so I ended up figuring out that I could buy a property after watching my landlord, who was also entertainment, collect checks from me every month. And this was, over 25 years ago. And so I just went and looked for a property. And that's when I got into real estate and started realizing the power of how I felt when I owned a property, when I was able to have a tenant pay for some of my rent because I had a duplex. So I had a tenant paying for some of the rent and starting to realize, wow, I can be on the other end of this equation of having freedom and having money and having choice and having opportunity and possibly somehow, I didn't know how back then with one property only, but how to build wealth.
So growing up, were your parents at all, did they invest or have real estate? Was that a completely foreign subject for you?
It was very foreign. My father was a Holocaust survivor and had a lot of challenges based on the way that he was raised. Obviously, being in a camp as a child really was a challenge for him throughout his life. And my mom was a pioneer in Israel. So as a child, so we had a lot of challenges in terms of how to survive. And that was one of the skill sets that they gave me. They were not particularly entrepreneurial. They were not very great with money. They didn't teach my sister and I how to be resourceful with money. So it really was a huge mystery for me.
So would you say, and it's interesting, like, I think also, like, I've heard this with other folks who have family members who are Holocaust survivors. I grew up in an environment where my father were Persian, but there's money trauma on both sides of my family, right? So my grandfather on my mom's side, my grandmother on my mom's side, my mom's mom grew up Great Depression in the United States. My grandfather grew up like dirt poor, like legitimately in like the mountains outside Lucca in Italy, like literally like dirt poor, where they didn't have enough food to eat. And my dad, his family was actually interesting in that they were super wealthy, lost all their money when my grandfather died. And then my dad who's super entrepreneurial, ended up coming to the States, getting his MBA, going back to Iran, and then everything was kind of taken away from him because of the revolution that happened. And so I grew up with a lot of money trauma in my family, and it spilled over into me. And I've heard people talk about it being epigenetic, and then obviously there's like the historical stuff I'm talking about. How do you think, like, when you start talking about your family, how did that affect you?
For me, it really was such a huge piece of my life not having money. And the reason is because I saw right away the world that that by not having any resource, I didn't have opportunities for things that I wanted. And so I saw the money equation right away as scarcity and survival. And for women, we really need to feel secure, and we need to know that we'll be okay. And so that's why money was really pivotal in terms of my ability to feel safe in the world, because I felt that at least with money, I'd have a roof over my head. I'd be able to travel. I'd be able to do the things I wanted. So it was really it became a focal point, almost to a detriment, because I was so obsessed that I almost choked my ability to make money, because I just was so fearful not to have it. And so it really did shape a lot of the actions that I took and the way that I lived. I think there were career choices I might have made. I might have wanted to be an artist and just paint all day, but I knew that it was going to be really hard for me to be able to have resource that way. And so that wasn't a path I chose to go down. So it shaped a lot of my life growing up that way. And the one thing that, even though my parents weren't very resourceful in terms of being able to make money or a lot of money, and explain that we had the opportunity, and my sister and I, to make money, what was interesting was that they taught us survival, and survival also equals determination. It equals perseverance. It equals consistency. It equals all the things that we need in order to be successful and make money.
So it's interesting. Like, I have a couple of thoughts. Like, number one is the word you used, which I thought was kind of fascinating, is detriment, right? And so I'm speaking for myself. Like, I have a really kind of a volatile relationship with money. I'm a man, obviously, and I do think that, to your point, there's a difference between how, probably in general, how men and women approach money. I notice that most of my friends who are men, maybe this is testosterone, tend to be more risk takers, right? I see it. I'm going to say something that sounds bad, but it's like almost like blind stupidity with money. Whereas I was actually more, when you're describing yourself and your relationship with money, I'm like, oh, that was me. Like, I was afraid of, I've been afraid of money up until pretty recently. And like it's not logical. Right. So did you find with yourself, was it illogical, or was it a thing that once you had it, you got comfortable, or when you first got it, you were still uncomfortable? Because speaking for myself, when I first got it, I mean, I was thinking about it this morning when I was in the shower. I'm like, I think I made my first million before I was 30. Actually, I know for a fact I was 27 years old. Okay. And I was still completely afraid of losing all of it. So being a millionaire at 27, this is a long time. It was 20 years ago. Like, that's different than now. I was still deathly afraid of money. What was your experience with that?
I think that what happened with me was that I felt like I was afraid of money, but I was also really limited in my capacity to expand money. So I would think, oh, if I could just make $100,000, so then that would be my limit. I never thought in terms of millions or larger money because I didn't think it was for me. I didn't think it was even possible.
Wow.
So I think that my relationship was one of struggle and just of feeling like it needs to be hard. It's something that I hear a lot, not only with women, but also, Darius, how you're sharing that feeling of worrying that money will go away, of that struggle where we're feeling like no matter what we have, we just never have enough. And it really stems down to where we are inside, how grounded we are, and what we believe our value is and our capacity is to be able to put ourselves out in the world and function. And then also learning the other piece about money, which is the rational piece of, okay, if I have this much money and I invest this much money, or if I have this much money and I have this business, then I can make this much money, and starting to really rationalize logically with ourselves, because the part of ourselves, the child in us that is freaking out about our money traumas, that's triggers from things that aren't really even real anymore, but they feel real in the moment, especially because money is just so layered, because we need it in so many ways to live our lives.
So going from a person that didn't really have a belief that you could create wealth, it sounds like you didn't have that down deep belief, I can build this, to becoming someone that did it sounds like a gap. And again, speaking for myself, I actually I'm a total enigma. I was someone that was like, dude, I'm going to be super rich. And I was afraid of money. So it's just super weird, right? Like someone that has this weird belief you can do it, but then afraid once you have it, right? And so I think that a lot of people, have and this is people that maybe don't have a money trauma or have no relationship to what we're talking about here. But I think a lot more people do than don't. When I read about, when I've studied, what my way of working around is, I started studying money. I started studying how to think about money. And so something that's become very true for me recently, and I'd love to hear your thoughts on this for yourself, having been someone that didn't have a belief and now has the belief and now teaches people, is I started realizing is that if I start looking at the past, and if past is an indication of the future for myself, I should have a lot of trust in my ability, right? Because I've done just over a couple decades, right? If I look at the track record, I'm like, hey, that's pretty good. Why don't I trust my ability to make that even better in the future? And so for me, there became this down deep, grounded trust that hey, of course you can do this. In fact, you could probably do it even better. What was it for you? Was there a turning point in which you started trusting yourself? What was your process to go from someone that didn't believe you had the ability to someone that actually has now not only had the ability but thrived within that?
It's such a great question. And first, what I want to say is, I think everyone has some layer of money struggle, because it's basically just being in the world, because we come into the world and we need money to survive, and we see really quickly how much money plays a role in our lives. And like I said, in terms of value that we put in the world, right? Because we're exchange value for money. You go to McDonald's, you get your meal. Hopefully you don't eat McDonald's, but that was just the example that came to my mind. But still, you got to pay for it. So, and the way that you make money is through the value of what you bring. And then of course the whole idea of security, right? Because if I can eat, then I'll survive. So there's a lot of triggers there, and it comes in many different forms. The transition for me also, I believe, came over time. It's just like anything. When you work on something long enough, then you're going to become better at it. You're going to become more comfortable with it. And for me, that's another reason why I even started my platform, Women Growing Wealth, because I feel that women need to be in a conversation around money. When we're talking about these things, just this conversation you and I are having, and maybe a listener's thinking, gosh, where am I with money? It almost just brings ease, just bringing the attention to it and saying, oh, I have that irrational thought, but now I don't anymore. For me, the other thing that really made the change had to do with taking action. So like I said, I'm a survival master. And so for me, even when I didn't believe it, I kept moving toward it. I kept pushing. I kept trying. I don't give up. And I kept looking for opportunities and meeting new people and discovering new ways and buying more real estate. And so you get better at things as you're willing to push yourself into that vision of what you want before you even get there.
Yeah, I love that. And it's really this like kind of like taking a risk, seeing that, building confidence within the skill set. And I do think that I do think that making money is a skill set. And I think that keeping money is also a different skill set. I see a lot of people that are great at making money and then lose it because they think that because they're good at making money, which a lot of times is around taking risk with your own abilities, right? Like you are entrepreneurial, you go try to get a job. That's all around taking risk. Building wealth is one skill set. Keeping wealth is a different skill set. So would love to hear your thoughts on that. I have 3 questions here, and I just hijacked my other 2 questions with this question. So yeah, give me your thoughts on that.
Right. So yes, making and keeping money are in 2 different categories, although they will also overlap, because as I make money, I can make money by having a company or by working in a W-2, whatever way that I'm making money. And then I can make more of it by saving money on taxes, by investing some of that money into something else. And so in that regard, I'm actually keeping more of the money I make, but I'm also making more. So to me, they all kind of intersect. And I think it's a nice way to look at wealth building and money in itself, is that it's a bit of a dance. It's like a water runs through a river. It's the same feeling that we can just keep expanding and making and keeping and dancing with it, so that we can get to that next place of where we want to be, and remembering to check in with ourselves and look at what we're feeling around, whether it's rational or irrational, because what can happen when you're not looking at how your relationship is with money is that you can end up not enjoying your life or not enjoying your experiences, because you're constantly, there's an underlying stress of not having enough, or not feeling like you're a good steward of money, or not feeling like you can manage it. And what I think is interesting is, just like anything, where when we grow a business or we have a dream or we have children, whatever it is we do, there's always going to be challenges that come along there. You and I have talked about the fact that, in fact, we were in an investment together that we didn't do it together, but we just realized we were in the same investment that lost a considerable amount of money. And how that felt for me, especially as a woman, feeling like, wow, am I really good enough? Can I really do this? Am I just a complete scam, because I actually made a mistake on an investment that a lot of other smart people like you even did. So what I had to go back to was realizing that with men, I know for you, you said, oh, I just wrote that off. For me, I looked at it like I'm bad, because women are much more sensitive about their ability to carve their way into this world of wealth building. And so it is a slippery slope. But I say it's just like anything that we're ambitious with, that we want. When we're challenged and something we come up against it, we question ourselves. And I think women do it a lot more.
Interesting. Yeah, I think probably in general, that's probably true. I mean, I'm like speaking for myself. I'm like, not me, man. I'm questioning myself all the time. I think people who are learners and who are very, I think if you're humble and you're a learner, which I think are both valuable, in a lot of ways, then it's good to question yourself, because then that's how we optimize to become better, So, but I appreciate what you're saying, which is like, I did think of it that way. I'm like, oh, I'm not bad. I'd like, you're not going to hit a home run on every deal. I'm in a deal right now, who I invested with a friend. It's a multi-family property here in Austin, 204 units. I'm the largest LP in the investment, which I don't like. It's a Class C. We got 60% loan to value. We assumed a Fannie Mae loan, fixed. Like, thing was supposed to cash flow, and I've not received one dividend from it. ICE is parked outside the building right now because it's Class C, like literally arresting tenants when they come out of their property. It's 20% vacancy, right? So it's like a comedy of errors on this thing. And I'm sitting there like, dude, like, I have a considerable amount of my net worth in this thing, and it's not performing. And I was sitting there beating myself up about it yesterday. And I was like, you know what? What did I do wrong in there? Too much concentration risk, just like way too big of a check. Like didn't do my homework on taxes enough, which is one of the reasons I made the investment, was for the accelerated depreciation. And I started doing that. I started beating myself up. And I realized, like, there's no value that's going to come from this. I could lose the investment, and I need to look at this as a learning opportunity. How do you, like, walk me through how you would think about stuff like that?
Well, it's interesting. I went through a lot of that, even in the deal that we were just talking about that I lost money in. And I think I go through some of the same processes in terms of, hey, I'm not going to hit a home run every time, and realizing that there's no way to grow unless I'm willing to take some risk. And at a certain point, we can all live safe, easy lives and have a lot of predictability. And let's face it, 90% of the world do that. There are probably not a lot of these listeners, because I think people are listening for the stretch in this podcast. And the stretch involves unknowns. There's no way you would have known that ICE was going to happen the way that it happened. And there's no way that you would have known that property taxes would go up so drastically in the Texas area. There's just certain variables that we can't predict. And then we just need to look at it, like you said, like a learning experience, and keep realizing that on this journey of life, we want to be expanding as much as we possibly can. We want to live fully. And if we don't want to live fully, or if we want to live fully, but we're not willing to be in the good with the not as great, then we're just not going to get the juice, because it just doesn't work that way.
Yeah, that's so insightful. So I'm gonna go back to one of the questions I hijacked from myself before, which is, I have a friend in LA, a good friend of mine, and she and I were talking about this because she has a lot of trauma around money too. And she and I've I can't remember if it was from her or from a book I read, but let's just say it's both. And again, I read, there was a year 2022, I think I read like 20 books on money. Like, I was just, and this is I'm someone that's read a lot of books around business and money, and like, but I always use books to solve my problems. And so there was this idea around money being energy, right? Mm-hmm. And if you start thinking, and I never thought of it that way, but if you start thinking about money as energy, and we are energy, and how we think about money as energetically, that, hey, like, creation of money takes energy to create it, and then it's stored up energy that I can then use to go do good with, or do whatever I want with, be gluttonous with, be hedonistic, give it away, whatever I want, right? And I know what it was. It was Bill Perkins, past guest on the show. Mm-hmm. So Bill and I were talking about this, and his book is Die with Zero, around it being energy, and you just kind of like use it or you don't. And it's like time you spent working. If you save it and you don't spend it, then you essentially like didn't get anything from it. And so I'd love to hear, what are your thoughts around money being energy, and how do you apply it if you have a belief similar to mine?
I do believe that money is energy because of all the things that you said in terms of the exchanges. And I also believe that we need to be able to work with the energy. And the way that we work with the energy and money is through literacy, education, conversations. And that's part of the reason that I'm so adamant about women taking charge of finances and at least understanding, okay, this is the flow of money. This is what's happening. When I invest, this is how much money my money can grow. This is how I anchor in real estate. This is how I feel empowered around taxes, so that you feel that you can work with the flow of money, so that you're sort of pushing the current of the money as opposed to the money pushing the current of you, and not having any sense of control. Because even though I'm saying that you can't have extraordinary results unless you're willing to take risk, there is a certain level of control that you're not willing to give up. And so I feel that we can gain more control and expand into more risks and more unknowns as we understand it more. And I do feel like money and investing and wealth building is something that most people don't fully understand. And I think when you don't fully understand it, there's a sense of lack of control. I can't tell you how many clients I have where they tell me, I just gave my money to a financial advisor. And I'll say, well, that's great. You know, do you know how much money you've made? No, I don't really know. Well, have you ever looked at your cost basis and seen how much time has passed and how much return you've had? No, I haven't really done that. Do you know how much your financial advisor is charging you? No, I don't really know. So, I mean, these are all ways in which money's just talking about keeping money, right? Money's just kind of leaking out, but we really don't even know how much. And we almost don't even want to know. It's like, no, I'm just going to keep doing my business and making money there, but I'm not going to figure out the whole other piece, which is what anchors all the work that we've been doing. And what I look at as wealth. And a lot of that is energy and how we're moving through the world.
Yeah, I love that. You just reminded me, like first of all, I'm financial advisors don't like me because I treat their job. I treat what they do as a business, and I go, you need to give me my income statement and my KPIs every quarter. And they're like, what does that mean? And I'm like, I want to know my returns quarter over quarter. 1 year RO, like percentage return 1 year, and I want my 3 year and 5 year returns since I've been with you for however, depending on how long I've been with them. I want you to show me quarter by quarter what my percentage per year is annualized, and I want you to show me what you've charged me for each quarter. And I don't think any of their clients have asked them for that. I'm like, I want my income statement every quarter, and they're like, wait, you're asking me to show you? I said, per investment, what you're charging me per quarter, dollars you're taking out. And they kind of get freaked out when I do this because they're like, dude, this guy's gnarly. And I'm like, yeah, man, I'm not paying you for, what am I paying you for? Right. So that I'm not their favorite. They always tell me they don't tell me this. I know I'm their biggest pain in the ass client, but I don't care. Listen, I invest in wealth managers that it's exactly what you said. No one pays attention. They don't understand it. And it's sticky and they just stay there. So it's interesting you said that. I have a question for you though. So, gosh, I had 2 questions. God damn it. Forgot my question. Hey, by the way, I forgot to tell you this before the show. So I'm going to give it to you right now so you can think about it. But we have a thing called the greatness question. And before I give the greatness question to the person, I like to have them do kind of talk about what they're working on. We're going to do something different on the show just because sometimes it's hard to get people to the end of the show. They get busy. I know you're doing a really cool mastermind type of thing coming up. Do you mind plugging that right now? And then before you plug it though, just so audience, I want you guys to go check out this project she's working on, that Tamar's working on. Before you do that, I'm going to give you the greatness question and I want you to think about it. And when we come to the end of the show, I want you to answer. I'm going to give it to you again. I want you to answer. Is that cool?
Yes, of course.
Okay. So don't answer it right now. And guys, listen, I always do this off air and I just forgot because Tamar's my buddy and we were just bullshitting. So the greatness question is, what is the number one barrier to creating greatness that you overcome in your life? And how did you overcome it? Okay. So don't answer it, but do you want me to repeat it or are you good?
I got it. I'm
All
sure
right, cool.
If I want you to repeat it right before, will do it for me.
I am going to repeat it right before. Anyway, so talk about the event you have coming up, and then we won't have to do it at the end of the show. If you want to give people other stuff at the end of the show, you can do that as well. But talk about the event you have coming up, what's going on with that, who it's for, and how people can learn more. And then we're going to go back. I have a couple other questions I want to ask you.
Thank you. So, what I have going on is a 6-month mentorship, and it is for accredited women and high achieving women, which means that you're making $200,000 a year, or if you're married, it's 300, I believe, right now, and then or a million net worth. And what this is it's an investing group, and we'll be looking at investment opportunities and targeting 10% plus returns. And we'll be learning about tax strategies. When I say we, it's mentorship. So I'll be bringing myself and my resources in. And it really isn't so much about necessarily if you're taking advantage of the investing opportunities, if you like them and you understand them. It's more about you understanding them. It's more about being in the conversation of wealth. It's about even what Darius and I just talked about, which is that women don't even know a lot of times what their financial advisor is charging them, or whether they're even making money. Some financial advisors do great, and some of them don't. And you should know. And they don't know access to other opportunities, or how to work with retirement plans, or whether or not they're set up with their trust. All of these things are so critical for every woman. So even if a man is listening and thinking, gosh, my sister could really benefit from that, send your sister to me, because this is in my heart. This is what is something that I know is so powerful and a shift for women. I'm hoping this mentorship will go on for years and years. Women see the value of how important it is to be in conversation with money. So we're starting May 8th, and you can go on Women Growing Wealth, and you can email me at tamar@womengrowingwealth.com, and just let me know that you're interested, or go ahead and apply on the application. It's very, very reasonably priced, just so you know. This is a value that I really want to give to as many women as I can.
Cool. All right. Well, you guys, I never do plugs in the middle of the show, but Tamar's my friend, so I'm hooking her up. And yeah, you guys check that out. But I want to go back to my questions. So one of the things I realized in starting to invest, because I was a person, 5 years ago, I was running a 9-figure company. We were doing 200 million in revenue, 1,000 employees. 85% of my net worth was tied up in the business. I own a multiplex in San Francisco. That was my only investment. I think I had $1 million with like a financial advisor who I was annoying with some of the stuff that we're talking about. But most of my net worth was either in cash or was tied up in the business. And the reason I was in cash is I was afraid of like my business blowing up, which I've had businesses go sideways before. And so I started this journey of investing, and I hired a financial advisor who I've now annoyed for a few years. I joined Tiger 21. I started looking at investments by myself. And the conclusion I came to, which I'm like, now I'm this is 2025. This is 5 years later. So half a decade of me like studying investing, putting money to work, testing out thoughts, going into the market in 2021, getting out of the market at the end of 2022. And then literally I did that. I went in and like an idiot. Right. And so what I realized, and I'd love to hear your thoughts on this, is that I think that there's different investments work for different personalities. And so some people don't care about the volatility of the stock market. They're like, well, whatever. They're having a bad week because their net worth's down because the market's down. They feel really good when the market's up. I think I'm describing probably most people. And I was like, I don't want to look at this volatility of the stock market. There's only, for me, if probably under 10% of my net worth can be in the market without me getting uncomfortable at this point in my life. I like real estate. I don't know what it's worth. I like private debt. It throws off a ton of cash flow. For me, I actually don't even mind that a lot of this stuff is tax inefficient, because I just like to know that I have enough cash to cover my life just coming off my investments. And if I choose to reinvestment tax inefficient, I know that cash is coming in, because a lot of these outside of real estate, a lot of the stuff that throws off a lot of cash, you get taxed as ordinary income. But for me, I'm like, I don't care. That works for me because that allows me to be super entrepreneurial, and that's where I'm going to make most of my wealth anyway. What are your thoughts on investments matching someone's personality and it not being one size fits all?
I think it couldn't be truer. Whenever you go to a financial advisor, they're always checking, well, how much risk do you want to take? And what's your, do you want to lose? One of the famous questions they ask is, do you want to lose money? Well, no. So then oftentimes you end up in an annuity making 3 to 4%, or some stocks that make 5%, which, as we know right now, don't beat inflation. So you have to be careful in terms of, one, understand. I do think definitely people have risk tolerance. They definitely have certain assets that they're more comfortable investing in, and they definitely have more flexibility the more that they understand how investing works. So, in other words, maybe 10 years ago, I might have been really nervous making certain investments, but now I'm not, because I understand more about the market. I don't look at my stocks every day because I know the market's going to go up and down. I invest for companies that I believe will grow over time. And when I'm uncomfortable, I use ETF. So I use something that has a group of companies inside them. So if a couple of them don't do well, the other ones will pick up the slack on it. And even though I don't make as much, I'm still safer. So I think that, yes, I think that there are definitely risk tolerance. I think that that's part of why Women Growing Wealth mentorship exists, so that you can explore what really are my risk tolerance. Because it's not just as easy as going into a financial advisor and saying, yeah, I don't want to lose money. Yeah, well, there's a lot of room in between I don't want to lose money and making good money on your money in investing. So where is that comfort space for you? And I like that you've said, I'm not comfortable with the stock market. I like real estate, or I know that I'm going to grow the most money in my business. I think that certain money needs to be anchored. So in other words, if you make, a couple $1,000,000, where are you going to put that money? Where you feel comfortable, where you can make it, where you can have it growing money on the money if you're not putting it back into a business. So I think that there are certain things that we want to have in place. When I talk about my net worth, a lot of people talk about how much money their business is worth, or how much money they have in certain properties. I always talk about net worth, because that's how much money I have, how much money I can anchor around that is actually my money, my family money. And that is the pile that I focus on growing. And naturally, like, I grow business, I grow real estate, all the other vehicles. But I think that within the risk tolerance is an important way to understand, okay, what asset classes make sense to me? Where do I want to put money? How much money am I allocating? And what do I really need to risk? Because I think that was part of the reason when this one investment that I had mentioned a couple times, I think that I thought I was going to make a lot more money than I normally make. So I kind of got big-eyed. And then, of course, there's a lot of other smart people in it. So I got a little bit that increased my my reasoning at that time. I would never follow the herd ever again. I've learned that is not a way to invest. And I also would know that I don't need to make a 10x return on an investment, that I'm happy with a 10 or 20% return. Even though some of my investments make more, I don't want to risk losing money. So that's a lot of material for the audience to think about for themselves.
Yeah, it's interesting. I do think that like the risk-free return is whatever the 10-year treasury is trading at, which is like what, 4.4% today. Anything above that's risk. Anything. Now, if you're smart, you can find like pockets of less risk that are kind of mispriced, right? It's like there's an investment. I don't know if you've looked at the Chicago Atlantic investment. Those guys do like cannabis. It's a bit essentially lending against cannabis businesses on real estate. Like, it's mispriced because of the regulatory environment. I maybe it's not. Maybe I'm just a moron, but I think it's mispriced. And so you can get like a 12, 13% return. The ticker on that's REFI, REFI, and it's publicly traded. I'm like, I love that stock, because it's like an unlevered REIT. I think that's mispriced. So I think that you'll sometimes find these opportunities, but what I find is markets are efficient, and like there's plenty of smart people out there. So I've come to the conclusion that, hey, if I'm getting more than a risk-free return, I'm taking risk, and I just need to like offset that with stuff that's less risky if I don't want to put all my money at risk. The other thing that I learned, I have these friends. Are you familiar with the group Hazor? Hazoor, the Hazor group?
Mm-mm.
I'll introduce you to them. They're Austin guys. I went to Stegan with Harpreet, who's the CEO. They have about I think it's a couple $100 million alts in kind of alts fund, and they do a bunch of cool stuff that's like for their own family office. But the brother, Harpreet's brother, has this theory around, they call it single, double, triple. And when they taught this to me, this is like early in my 5-year journey here of becoming an investor. He said, look, like the way we think about allocation of capital is single, double, triple. And single is 1% of my investable net worth. And that's just like, hey, I just want to like go learn about an investment. So I put my money in it. And it's around 1% of my investable net worth. If I put 1% of my investable net worth in something, investable is like if I don't count my house, right? So you pull your house out of your net worth, whatever you have left, 1% of that. If I have 1% of my net worth in it, I'll pay attention to it. If I pay attention to it, or I'll be interested in learning more about it. So that gets me like and you could do research before, but once you put your money in something, at least for me, if I put my money in something, I go geek out on it. Like that's just the way I am. 2% is I have conviction. So that's going to be like 2 to 3% of my net worth. I will allocate to an investment, and I have conviction around the investment. It's not just about learning. It's around actually like, hey, I think this is a pretty good investment. It's more like, I think 1% is too, but like, not only do I think it, I've done a ton of research. Oh, and I want to put a little more in. And then a triple is 5 to 10%. That's like, dude, this is a home run. I've done tons of research. I have full belief in this thing. And they kind of cap out around 10%. By the way I'm describing, this is how private equity funds are built. This is how venture funds are built. They don't have concentration risk in any one investment, because any one investment could go sideways, like kind of like the real estate investment we were talking about, or the one deal you and I are in that probably isn't looking so great. What are your thoughts around like single, double, triple? How do you think about allocation of capital?
Yeah, I think that that's a great way to look at it. And I think that you could certainly allocate that way. I look at it more with numbers. And when I say that, I would say I might put 25,000 in something, or up to like maybe $250,000 in an investment, regardless of investable worth, because I just feel like if I always look at, how much money would I not be destitute if I lost? So I don't really look at like 1% of my worth, my net worth necessarily. I mean, I might look at it like with cryptocurrency or something like that, where I'm doing an actual calculation. But for the most part, I just look at, okay, this is what I believe in. How much more can I make? And if I put this money in and I lost it based on what I thought, how would I feel? Now, I also want to say though, because you had said that you feel like anything over 4.4% in treasury is a risk. Okay, so I'm going to give you an example to completely dispute that. So let's talk about single family homes. Okay. I have several, and I believe that they can be fairly low risk. And it's just one category where I feel like it's low risk, because a lot of times things are collateralized and you can run numbers to make them work the same way you buy business or you invest and grow your businesses. So for example, I always like to use the example of the first property that I purchased, which was 25 years ago. And it was $400,000. I put 10% down. So it's $40,000 down. And then I had a tenant. So they're paying a good portion of my mortgage. And then now that was a property that I kept for sentimental reasons, because I didn't have a house growing up. So I wanted to feel like I had a home if I ever wanted it. So now that property is worth close to $2 million. So basically my mortgage was being paid. Then over time, I moved out. I had 2 tenants. So then I started making cash flow, which is money that was over all the expenses. Then I refinanced. So then I took money out of the property, and that's all tax deferred. So I'm using that money to buy more properties. And then it's still worth close to $2 million today. So to me, that is much more than a 4.4% return. It's an asset that I have. I can also do leave that as an inheritance to my kids. So there's a step up in basis. So then there's about $2 million that's not going to be taxed through the generations. So, I mean, that's just one example of win, 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 win. And it's so much more profitable than a 4.4%. So I just wanted to add that in too, just because I just think that there are opportunities, but I think that that you just need to be strategic and understand what you're doing. And if you are, then you can do really well.
Yeah, that's interesting. It's funny. Like I have a similar story in that I bought my building in San Francisco 2003, so 2004, so 21 years ago. Numbers a little bit different, but one of the exercises I do with this though is I'll take an inflation calculator against, because real estate tends to kind of move with inflation depending on where it's at.
Another great feature of it, yeah.
Yeah. And I do think that there's one part of that I didn't say that I think you're touching on that's interesting around that Justin talks about actually, which is the government kind of incentivizes certain behavior, right? So there's a tax aspect of real estate that makes that kind of mitigates that risk, right? I don't need to get a 4.4% on real estate because I actually get some tax advantages that increase a lower return up. But I've done this with my building in San Francisco because it's gone up a lot in value. And then I realized that if I compound, which we're talking about, I'm moving into the eighth wonder of the world, the power of compounding interest. When I take the fact that I bought, and yours is going to compound it out at higher than 4.4%, and the risk-free return actually probably over the last 20 years is not averaging 4.4%. Right now we have this kind of this weird. It's probably the first time it's been in the fours, outside of early aughts, right? I think if we compound risk-free returns over the last 20 years, you're probably in the threes. And so I think that I do think because of the incentivization of the tax code for single family, for home ownership, and because of risk-free return probably is lower than where we're at right now. For sure it is, because we had rates at 0 for a decade. I do think that there's probably exceptions to that rule, which you've obviously gotten to take advantage of. I'm actually not that bullish on single family at current pricing with the current 10. If we go 20 years out, maybe I'm wrong, but I think it's hard to get the same returns we just got over the last 20 years. What do you think about that?
I think that it's likely that we're not going to see the kind of run that we saw, but we're definitely going through a transition now, and it's with the whole economy. So we're going to see, just like everything that flows in the economy, we're going to see it go down and it go way up again. So I think over time, in 20 years, I mean, will it be as much as what we've seen in the last 20 years? Maybe not. I mean, we also had 2008. We've had a lot of tips and turns. So how much more it'll be, I'm not sure, but I believe that it will be closer to an 8% plus or 10% plus return annualized over time if you invest correctly.
Yeah, that's a good point. And I think with tax savings, you're probably there. By the way, I just ran the numbers of future value calculator. So you doubled the risk-free return. Risk-free returns, say 3.5 or 3.25. Your investment was at 6.75 annualized return for 25 years. So great work.
Well, not to mention the fact that that I haven't had to pay that much into it either. Because
right. No. That's amazing. You're right. Cause you only put 40 grand down. So man,
yeah. And I've taken money out of it too.
Yeah. No, that's a home run. That's an awesome investment, especially was that your first investment?
That was my first investment.
Oh, you're awesome. That's incredible. How's your time? Can you run for another 15?
Sure.
Cool. Sorry, we got a little bit of a late start. So yeah, no, I actually think that's a really smart way to start investing is with single family, because I think that or anything 4 units or less. I think that if you start there, my first investment was a 4-unit building. That ended up being a really good investment too. And so I think that just shows that there's an intuition. I looked, by the way, for 3 years and found my first building on Craigslist, not on MLS, on Craigslist, under market. So how did you find your first place?
I just found it on the MLS. It wasn't back then. I think that there were still a lot of people that didn't think real estate was for them. It became much more popular over the years.
Hmm.
And I do think, in addition to single family homes, I think there are so many opportunities. I mean, that's why I have the investment group, because I think there's a million ways to make great returns, and they're somewhat risk free. Not risk free. I shouldn't say that. There always is risk, but I'm saying that sometimes when I say that they're risk free, I would say they're really risk reduced, because a lot of them are collateralized. Collateralized means, I guess your audience is pretty sophisticated, so they understand what that means, which
Sure.
is that it's just anchored in something that if something goes wrong, you can take the property or you can take the asset. So in that regard, it's hard to lose your money if there is something there that is of the value of what you're investing in,
Yeah,
or more.
that's
Yeah.
great. I love that. So, when you start looking at, what you're excited about as far as investments right now, I think the world's in kind of I was talking to my mentor about this yesterday, because I'm in a transit, like I'm doing some transition stuff right now. And he was like, he's 82 years old. He's a very, very successful person. He was the CEO and chairman of a company that took LASIK eye surgery public. Right. So this guy's like no joke. And yeah, there's a lot of like scary shit going on out there. We have AI that's disrupting. We have interest rates that who knows what's going to happen. We have a president that is pretty volatile in his decision making, that is causing, like, at least it looks that way, depending on where you lean on the political spectrum. He's either a genius or he's screwing everything up, depending on who you ask. But all that is to say is there's a lot of volatility out there, right? And so, like, I think that can create some paralysis around like taking risk. I think that also creates a lot of opportunity. If we talk about, like Warren Buffett, like, don't let a good crisis go to waste. How do you, where's your head at on what's happening out there, and how are you thinking about investing probably during this current administration or the current state of the world? Because I think it's going to carry on beyond this administration with with what's happening with AI. How are you thinking about that?
I think that I feel with investing the same way that I've always felt about it, which is that you buy good deals, you look at the variables, you analyze, you think about what you're doing, you look at what your objectives are. And I do believe that right now there are fantastic opportunities. And I think we still need to be careful. Just like always, we still need to be prudent about what we're doing. So, yes, we're in a dip. And whenever things go down, there's an opportunity. If you put money in the stock market right now, chances are in a while, you're going to see a good return. There's no question. So I think that's the reason that I'm such an advocate for education and conversations around investing, because most of us just turn a blind eye and let whatever happen. What if you could get ahead of it? What if you could actually be someone that could think about things and understand them and decide, no, that's not for me, or yes, that's for me, and actually make money on it and feel good about it?
Yeah, I love that. So I should have asked you this earlier in the show, but like, you're a person that was, in the creative world and then transitioned to this investment world. What was was it like a slow transition for you? You had a job and then you got away from that and went into being an entrepreneur. Like, that's a pretty rare transition. If you ask Gino Wickman, he'll say 6% of all people are wired to be an entrepreneur. And not only that, you've done it through, a big part of that, at least my understanding is through investing, becoming an investor. Like, what, for an audience member that's listening to this thinking like, man, that's what I want to do. I hate going to my job and like having to work paycheck to paycheck. Like, how, like, give some, maybe a couple, one or two tips on like, how do you start the process of getting away from living paycheck to paycheck, becoming an investor, being able to, buy your time back? Like, what are your thoughts on that?
My first recommendation is to make a decision. Make a decision of the kind of life that you want, what you want to create, and know why you want it. And from there, you will start to make decisions that will start to move your needle forward. So, for example, if you're in a job and you're making $250,000 a year, and you have an opportunity to go to a 5-star hotel for 3 weeks or stay at a 4-star that's considerably considerably less, stay at the 4-star. Make choices that put more money in your pocket so that you can start investing. I would start educating myself. I would probably look at buying cash flow businesses, buying a property, starting a side hustle is a huge one, because when you have your own business, all of a sudden you have an ability to have tax deductions, to work in a certain way where you are operating on your own. That gives you more autonomy. So I would start working on that. And then the second thing, well, actually, that was actually a couple things. I started with the first thing, and then I kind of rolled into the other things.
Oh, those are great.
And yeah, and I would say that, as far as myself, I think I was always an entrepreneur. And I think that's a question that every person should ask themselves. Are you a person that is adventurous? Are you a person that wants to live fully more than anything else in your life, that you have that burning desire that you want to explore? And if you feel that, you are likely an entrepreneur, and you need to let yourself rip. In some way, you're going to have to rip a Band-Aid. You're going to have to take some chances. There were times when I started out where I didn't have a lot of money, and I just lived with less because I knew I was visioning into something that was greater for myself. So I think a lot of times what happens with when we have W-2 income and we have a predictable paycheck coming in, is that we're not willing to let ourselves feel the spirit and the heart of what really is inside of us and what we want, and letting that rule. We're letting the part of us that is worried about money, that is scared, that is fearful that you won't be able to do it on your own. Now, granted, I always say, if you have a family and you have bills to pay, you gotta stay in what you have. You can't just go fly free. And at the same time, you can still be working toward that vision. So it's not an either or. And I think anyone that creates it like an either or says, I'm kind of stuck. Well, yeah, you are stuck. You know why? Because you said you're stuck. So stop saying that. I have kind of a rule that I say to myself. I just started getting a little more forceful with myself, because our mind does things and says things to ourselves that are so negative, and we just let it go. I'll hear myself say, oh, this is hard. And what I do is I just kind of smack myself on the arm, just to kind of give myself a little nudge of, see how it feels. Like, don't say that to yourself, even though maybe it is challenging, but don't say it's hard. Don't say it's a struggle. Don't say you're stuck. Don't say you can't. Don't say you don't have opportunities. Don't say maybe you don't know how to do it, but maybe ask yourself, how can I do it? What's one step forward? Maybe you're listening to this podcast today, and then all of a sudden you think, gosh darn it, I'm going to do something. I'm going to go and take an action. I'm maybe going to buy a property. I'm maybe going to join an investing group. I'm going to do something to help myself, to move myself forward.
I love that. Such words of wisdom from my friend Tamar. Appreciate you. Well, we're getting towards the end of the show here. Again, I know we in the middle of the show, we promoted your mastermind coming up. If people want to connect with you, what's the best way for them to learn more about the work you're doing? Obviously, you have the book, The Millionaire's Mentality. They can check that out. But where can they learn more? Can they get the book? Where can they check out your mastermind? What's the best ways to connect with you?
You can get the book at tamarbook.com. And on there's actually also a free download of 20 things I wish I would have known before I started investing in real estate, which is really great. And you can get that there, or you can just go to womengrowingwealth.com and you can contact me and you can see information about the program. And if you want to learn more about that, then just put yourself out there and make it known, and then we'll connect with you, because we'd love to know you.
Awesome. You guys, we'll make sure we put that in the show notes, but you can check that out, womengrowingwealth.com. Put all this stuff in the show notes. Please, I highly recommend it. Anyone that wants to learn about this, Tamar's really an expert. Connect with her offline or online, and you won't regret it. With that said, are you ready for the greatness question?
Yes.
All right, let's do it. What is the number one barrier to creating greatness that you've overcome in your life, and how did you overcome it?
The number one barrier to creating greatness in my life was not believing that I was great. And how did I overcome it? I overcame it by doing what I just told all the listeners to do by asking myself, what kind of life do I want to have? What do I want this journey here to be about? And am I willing to have dirt under my fingernails to work and do whatever it takes to create that life? And if that answer was yes, which it was for me, I just started walking on that path. And I'm telling you, there are days where I still get scared and I still wonder, oh my gosh, what have I done here? And I also feel exhilarated to be alive. I also get the great joys of meeting amazing friends like Darius and living where I want to live in Austin, Texas, and traveling where I want to travel and doing all the things I want to do from a sense of power. And while it's not always perfect, I keep holding on to that vision that I want to live in a certain way. I want to live fully. I want to express myself. I want to share women growing wealth. I want to do all those things. And so ask yourself what it is for you. And that's the key to greatness. That's the key to it. And then just walking through and just letting yourself live the life that you're here to live, that you want to live.
Love that. Tamar, so much gratitude having you come on the show and sharing your story and your knowledge and all of your value to the world. Thank you so much for coming on here today. Appreciate you.
Thank you so much for having me. It's so much fun.
Definitely. Guys, go out there, support Tamar. Share this as us TGMers. We are learners and givers. Share this with all your friends and go check out Tamar's work. Until next time, peace out. We love you. You are listening to The Greatness Machine, and that's a wrap for today. Listen, if you love what you heard, subscribe to the show on whatever podcast platform that you're tuning in on so that you don't miss any of our future episodes. We have tons of great people coming on, and we're stoked to have you here to enjoy it with us. Leave us a review. Tell us what you love most about this particular episode. We love getting the reviews. We love to see what you guys love most. And if this particular episode, made you think of someone who's leveling up in their business and in their life, print screen, share it with them. Leaders are the best givers. And after all, we're all here to support and grow with each other. And in case you want to see some of the fun behind the scenes shots or some of the things that we're doing, I'm actually writing about this in my weekly newsletter. Go to www.therealdarius.com and subscribe to my newsletter. We're talking about fun things like business and life and mindfulness and cryptocurrencies and gosh, I don't even know, everything and anything, but it's tons of fun stuff I write about. I try to get it out on a weekly basis. You can subscribe at www.therealdarius.com. And with that said, look, thank you guys so much. I appreciate you. I love you. Peace. We're out of here. See you guys on the next one.
She's my lover.